Well, this is your Wall Street wake-up call. Japan dodging the recession bullet during first quarter. To talk more about this, let's bring in Samir Samana, the global quantitative strategist at Wells Fargo Investment Institute. So, Samir, Japan's economy grew 1.7% during first quarter compared to a decrease of 1.7% during the fourth quarter of 2015. So this is obviously good news, but if we have to say that, Japan dodged a recession, obviously something is still wrong here.
Absolutely. We wouldn't focus on, any one quarter's number for growth. I mean, what we're looking for essentially is what is the underlying trend for growth. And so Japan, much like Europe, much like other parts of the world outside the U.S., continues to improve. That's what we would take away from last night's report. All
right. So is this a good enough number that it takes additional stimulus from the Bank of Japan off the table, at least for right now?
It's pretty iffy. I mean, they disappointed back in April. So, I mean, at this point, what the BOJ will do is a little bit of a grab bag. But honestly, we think that they still need to do more. If you look at what the yen's done recently, it's strengthened quite a bit. And that will continue to be a headwind in the coming quarters. So they need to be looking forward rather than backwards.
But what else can they do? I mean, they just employed negative interest rates a few months ago.
I mean, again, you kind of look to them and you go, what more do you have? And they tell you, well, there's plenty of room. There's room to cut rates further. There's room to buy more assets. If you look, they're already buying REITs, ETFs, et cetera. So, I mean, I guess if you at least listen to the central bankers, the mantra is more and more and more. But I do agree with you that at some point markets do start to at least question the credibility.
Do you agree with ECB President Mario Draghi, who says there is a limit to how, much rates can go into the red?
I mean, once you get into the negative side of things, I mean, again, there's probably a place where it starts to hit banks and their profitability, where consumers, there's some rumblings around the edges about consumers not getting negative rates on their mortgages, wanting to maybe sue some, European banks. So I think, again, it starts to kind of bring us into this bizarro world where people really do try to figure out what do negative rates mean, and at some point it could undermine confidence.
All right, let's also talk about the Federal Reserve, because we're going to get the minutes report of the April meeting later today. During the March minutes, we saw a bit of a divide between Fed members in terms of who wanted a rate hike and who didn't. Do you think we'll see less of a divide during this April minutes report?
A lot of the data has improved recently, so I think, again, you'll probably get a little bit more cohesion around, again, we want to raise rates in 2016. I'm not sure you'll get any more cohesion around when they decide to raise rates.
Do you think June is still on the table at this point?
We're not. We're in the camp of maybe one in December.
But we still have many Fed members saying that 2 rate hikes is appropriate this year.
Absolutely, and they were saying 4 were appropriate at the start of the year. So I think the Fed's a little bit behind the curve. And if you look to see what the rest of the world has done, which is they've gone deeper into negative territory, I think the Fed will eventually realize that on a relative basis, their rates actually have crept higher.
All right, let's also talk about the markets. We're sort of trading in this narrow range. I mean, where do you see the markets going? Can we get above this sort of, or stay above 2,000 in your view?
There's a lot of markets that are range bound right now. If you look at the dollar, if you look at stocks, if you look at interest rates, they're all trying to figure out what's the path of least resistance, where do we go from here? And so honestly, they'll probably all break out at the same time. I think what it'll come down to is how strong is the underlying economic data. If you kind of get away from the last 5 or 6 years where it was all about central bank policy, we think going forward it's all about global growth. And we think it surprises to the upside in the second half. Stocks break out higher, rates probably back up a little bit, and the dollar probably strengthens again.
Okay, and we'll be watching that critical level of 2,000 in the S&P 500. All right, Samir Samana from Wells Fargo Investment Institute, thank you for coming by.
Absolutely, thanks for having me.
I'm Scott Gamm, and you're watching The Street.